welcome to this video. Today I just wanted to give you a quick breakdown of the approach that we basically use whenever we take a certain position in the market. I'm just going to give you just a simple quick thought process that we follow whenever we spot an opportunity. We basically scan for opportunities from the daily time frame as well as the 4-hourly. Those are the two time frames that we try by all means to actually base our buys from. As you can see, we're on the daily of the pound yen, and we're going to just look quickly of this particular move to the downside, how we could have potentially have partook in the market with regard to this particular bias. Let's quickly check this out. I think it's very important that I must point out that we are basically, the approach that we use is the breakout strategy. We are breakout traders. We spot opportunities from scanning for potential breakouts in the market. As you can see here from the daily, the market has been trending up, but we had a slight break here, which was confirmed by this move today. And then we could have potentially partook in this market from this point all the way down. I'm just going to show you how you could have spotted such opportunities. Quickly, let me just make this. Let's move to the 4-hourly from the daily. As you can see that the market is trending down. I've purposefully deactivated the trend line to actually show on the lower time frames, because there are certain trend lines that guide me from the higher time frame. So I want us to focus on the immediate price when we get to the 4-hour. I don't want us to worry about what has happened as far as this point here. So I just want us to focus on this particular portion in the market. All right. So from there, we could see that we have intermediate trend line that we could actually draw in the market. I hope you can spot it, because it starts from basically here to there. See that? Yes, that's very good. All right, so having this strong break, we should now, from witnessing this, we should actually anticipate a retrace. And then when we expect the market to retrace, there are key levels that we need to pay attention to. The first one being this low here, right? As you can see that. The second would be this particular lows here. So those are the two key areas that we need to pay special attention to. That is, we need to spot for opportunities from those particular levels. For instance, if the market doesn't respect this particular level, the immediate level that we should anticipate the market to respect would be this one here. So as we move to the lower time frames to scan for opportunities, remember that we don't force anything, we're scanning for opportunities. We should look to find those particular setups in the lower time frames. All right, let me move to the 15. If there's nothing on the 15th, it's also fair to also move down to the 5 minutes time frame, right? If you don't see anything on those two time frames, you can always go back to the 1-hourly as well, because it's also one of those key levels that key time frames that we could pay special attention to. As you can see from the 1-hourly, the market did trend a bit up. It ranged just a bit in this area before it sank down, right? So but what I wanted to show you was in the 15 minutes time frame. Now, as you can see that the market is actually playing around in this particular level, just above this level that we've marked. The last part that we need to pay close attention to would be the last push up, would be this one here. As you can see, yes, the market did create these two equal highs here, and then came back up. It went, created some sort of a double top, as you can see. Now, what we should pay special attention to is the break of structure, the market structure in this particular level. It would be the low from these two double tops. The low would be here. So once we see this break here, we should anticipate our sell to that downside. As you can see, the market did broke with two strong candles. So once also this retraced back, So once we have had these two candles closing below, it could be one or two, it doesn't matter. You should now start to actually anticipate your sell would be there. Let's take this candle for instance. It should be there, and then you would be having your stop loss. Ideally it should be above the last two highs, which are these two double top here. It should be, it's more safer there. As you can see, it's a 25 pip stop. If you entered the market here, you would see that you would have enjoyed a bit of a drawdown. Pardon. As the market did retrace back to test this level here, but it didn't reach the double top, and then the market started to actually tank all the way down. As you can see, you would have banked nice pips with this very favorable reward to risk to reward. As you can see, it's 1 to 3, but there's nobody say you couldn't have maximized your positions. And actually look how this move was. It was a massive move from that particular point. Remember that all this excuse me, all this is based on what we have seen on the higher time frame. That is the breakout from the higher time frame. Then we need to zoom down to actually enter the market from the lower time frame to ensure that we don't have to stretch our risk to reward. Therefore, it means that we have a favorable risk in order to gain all these rewards that we can anticipate in the market. That's basically how we actually approach the market from a day-to-day basis. All this started from the higher time frame, that is the daily, as well as the 4 hour, as you can see here. All this we anticipated from this particular break here. So our chances are massive because we are taking a position in line with what the market is actually pointing to say that we are ready to actually move down from these levels here. Therefore, we are also aligning ourselves with what the market is currently showing to us, rather than going against what the market is actually giving us. That's basically the thought process behind the trades that we normally take in the Telegram group. And the one last other thing, one might ask, for what were the confirmation and stuff like that. I usually point to you guys to say that look for these weak rejections here. They are actually some of the confirmations that we use in the market. We need to see those rejections. We need to see price telling us that, hey, I can't break above this particular level. I keep coming back to test it, but then I'm failing to actually push above this particular level. That's basically how we actually approach the market. I hope this brings more clarity to the signals that I'm sending in the group, and I hope that it helps you to actually approach the market in a better way. And this would add on to your maybe your trading arsenal, if you have one. That is your trading package, your trading skills, your trading strategies that you use on a day-to-day basis. Hopefully this was available to you guys. If anything, share with us on the comments below. Tell us what you think and how you approach the market as well. We'd love to learn and hear from you. Thanks for watching. Bye bye.